the types of cash book. One is a single column cash book. In case of a small business, they may not have a bank account, and if they have only a cash account, only deal in cash, they could have a cash book. The format, it says date, particulars, ledger folio, amount, date, particulars, ledger folio and amount, debit and credit side. The format is exactly like that of a ledger, except that in a ledger we have a journal folio column. Here we have a ledger folio column. So the format of a cash book is just like that of a ledger, with a date, with two sides, debit and credit, with columns, date, particulars, folio and amount on either side. What are the entries? How do we record entries in the cash book? The debit side of the cash book represents cash receipts. The credit side represents payments. So this side is actually all cash receipts. This side is all cash payments. Suppose cash is brought in as capital, the entry would be cash account debit. We would first straight away record it in the cash book. We don't go to the journal proper. There is no other journal. We put the date here and write cash account debit, and we would straight away write to capital. This is how transaction would be entered, and would write the amount. So all receipts, cash account is debited, the capital account is credited. This cash book is actually nothing but the cash account. So it's directly posted here. All receipts are put on the debit side. By convention, we write to, and we write the corresponding account, on account of what is the receipt of cash. So it could be to capital, it could be to sale, it could be to some debtor, whatever. Similarly, whenever cash payments are made, we record it on the credit side. Say for furniture, say for purchases, say for payment of salary, we put some amounts here. This is a cash account. This is a cash account. Directly, all transactions, receipts of cash are entered on the debit side, and all payments are entered on the credit side. By convention, we write by on the credit side and the corresponding account, on account of furniture, on account of purchase, on account of salary. The balance of this account represents the balance of cash in hand. It is a real account. Cash is nothing but a real account. Besides a single column cash book, we could have a double column cash book, which would have not only a cash account but also would have a column for discount. Let us take an example. Let us say Mr. X owes us 10,000 rupees. So X is a debtor. There's a receivable from X for 10,000 rupees, and let us say he gives us 9,800 and 200 is nothing but discount. So 9,800 is given, received by us in full settlement for an amount of 10,000. So how would we record this? We would put a date here, date of receipt. Since it's a receipt, we put it on the debit side onto X, because we are receiving the money from X, and we write amount received is 9,800, discount is 200. This is how a recording would be done in case of a double column cash book with a discount and cash column. Double column cash book with discount and cash. Any payments? Similarly, if we need to make payment to a supplier, amount is 5,000. Let us say we pay only 4,900 and get a discount of 100. What would this mean? How would we record this? It's a payment. Go to the credit side, put in the date and say by, let's name the person, let's say Z, by Z, the amount we get is 4,900 and 100 is discount. Here, this column, the cash column, represents the cash account. Discount, this discount is nothing but discount allowed because we receive payment, we receive less. The discount column on the debit side is a discount allowed and expense account. The discount column on the credit side represents discount received, discount received. The discount allowed and discount received columns, the totals are taken and posted to the discount account in the ledger. But this column, the cash column, represents the cash account. There is no further posting to cash account. What needs to be done is to post from the cash book to X's account to Z's account. Or in the previous example, to capital account, sale account, debtors account, furniture account, purchase account, or salaries account. We shall discuss the posting in a while. We are discussing types of cash book where it could be a single column cash book, maybe a double column cash book with a cash and discount column. You could also have a double column cash book with a cash and bank column, And sometimes we have a triple column cash book, 3 column cash book, a triple column cash book which has date, particulars, ledger folio and 3 amount columns, discount, cash and bank. Discount, cash and bank. In such a triple column cash book which has a cash and bank column, we get contra entries. Suppose money is withdrawn from the bank, the entry is cash account debit to bank. Cash account is debited. Let's say cash withdrawn 5,000. How would we pass this entry? Cash account is debited. So on the debit side, we go to the cash column, enter 5,000 and say this is on account of bank. We come to the credit side and say since bank has come down, credit side of bank we enter this and we say it's on account of cash. And this is a contra entry since the same transaction is entered on both sides of the account, on the debit side as well as the credit side, of course in different columns, but since it's entered on both sides of the same account, this is called a contra entry and we put C to denote a contra entry in the ledger folio column. So cash book may be a single column cash book with only cash. It may be a double column cash book with a cash and discount columns or a cash and bank column, or it could be a triple column cash book with a cash, bank and discount account.